Dhaval Ajmera is now joining us to talk more about Ajmera Realty numbers which have come in. The numbers on the face of it are very good. This is something in line with what the Ajmera management had guided almost 7 to 8 quarters back. I was just looking at the last conversation we had, Dhaval, and the way things are panning out now. Debt to equity has come below 1. So now a good performance for the quarter is in the bag. Can you give us some visibility? What kind of launches are planned which will be captured in FY25? Can you talk to us some more about that?
Thank you, Ajay. I think the year had been very good for us. We have been strategically looking at our aim of growing 5 times from where we were about two or 3 years ago. The momentum is continuing. We are already moving on this. Going ahead, we are looking at about 8 odd projects to be launched in this financial year, which will have a top line of about 4,500 crores. Plus, we have our existing projects and inventories to be sold. So overall, we are looking at 6,500 crores of project approximately to be launched or under construction together in this financial year.
Taking your plan to become 5x is something which is on track, but the growth rates have been coming off a bit, right? And right now you're guiding for 33% pre-sales growth in FY25. Do you believe that this is a bit more conservative, or given the fact that the cycle is maturing a bit in real estate, this is more of a realistic target, 1,350 crores?
So, two things. Yes, we are a little bit conservative. We want to try and achieve say and overperform. That is one. But at the same time, these 8 projects which we are launching, it's going to be launched at different timelines and phases. Obviously, approvals take a bit of time here and there. So taking into consideration, we presume most of our launches would happen towards the last quarter or almost just on the third quarter or the last quarter of the financial year. And hence, the numbers would pan out to be some in this year and some in next year. Hence, with these launches, we are seeing that panning out to be in 2 phases. And hence, that's why we are looking at least conservatively 33% growth.
Well, I want to understand what part of the business right now is coming from your legacy land parcels, which you keep, merging into the company as and when the visibility for the project comes in. And how much of the business is actually on joint development? For example, you recently announced one JD with Keystone Realtors as well. So how is both the sides of the business actually panning?
So of these 8 projects, 2 projects are from our legacy land, which is coming up in Kanjurmarg and in Wadala. And about 6 projects are coming from the outside purview, which is either the JVAs or the one which we are doing with Rustamji, or we are the slum redevelopment or Mada redevelopment or society redevelopment. So about 2 projects from our existing land banks and 6 projects from our different portfolios.
Quick follow-up. While I see that the growth rates may be a little softer side, obviously the base is becoming bigger, but they are pretty healthy right now. Your margins are almost flattish. I want to understand that, are you seeing on ground a phenomena that, okay, demand is good, but only at a certain price, and the absorption is actually happening at price levels? So pricing may not have upward bias from here on, even though demand visibility and absorption may happen.
So, we are looking at a aggressive growth trend, and, we have 2 options. Either we continue with our, momentum of sales, and we are marginally increasing our pricing as well. So if you look at from last year to this year, our average price rise has been about 10 to 12% or 13% across. Our PAT margins have obviously grown from 9% to 16%. And with the coming, trend, we do not want to be over aggressive on our pricing and not have, have less sales. We want to continue with this momentum, and hence we believe that if we keep the pricing right, I think the momentum of sales will continue.
Okay, so pricing is something that you're being cognizant of. And Dhaval, just before I let you go, a quick update on the Manhattan as well as the codename Bandra project. How are those scaling up?
Manhattan is doing well. As I said, the existing Manhattan project, which we have launched. We are very happy to say that we are just finished our project, our podium construction, and we still have about 35 floors to go. And we've already sold 76% of its inventory. So on this growing trend, we are in this financial year, we will launch another phase of Manhattan, where the approvals are, the planning is already done, and now we are gearing towards the approval stage. So hopefully by the year end and the first quarter of next year, we should be launching that project. And as far as Bandra is concerned, we are also almost finalized all the plans. The site is getting cleared, and even that should be coming up towards the year end and first quarter.
Okay,
All right.
Dhaval, on that note, we let you go. Appreciate you making time for us today.
If you like this video, then like, share and subscribe to ET Now.